how long is it going to take until I get my $70,000 back? And it's like, 8 years. That's not going to work for me. And then I went to the seminar, and in 1 hour, he showed me how I was able to do a deal and get all my money back within a year. And I was just like, oh my gosh. But in 1 hour, this mentor or a coach or whoever, I paid him, he taught me that, and my life changed like that. And then on top of that, he sold me my 6-unit apartment building. So again, my life changed like that. The speed in which I was able to transform my life was incredible.
If you're looking for flips and you're looking for wholesales, what areas are the best areas in Philly for those? I send you a property in Philly. What does a good deal look like? What is your buy box? What are you looking for in that flip or that wholesale or the strategy that you're using? Talk to me about what you're like, hey, this is a screaming deal. I'm going to lock this up. When I think of you, I think of, hey, this is one of your super skill sets. Can you talk to me about what you're doing for social media and how that works in your business?
And I say that because I hate real estate. I do real estate because it serves a purpose. It's a tool to fund my lifestyle. I was able to buy properties. And then in my 30s, I was able to escape and be free and not have a job. And so essentially, I'm kind of like quasi-retired from my 30s on.
Hey everyone, welcome to the Real Estate Hackers Show, where we talk real estate investing, building wealth. I'm your host, Dave Hathaway. I have an amazing interview with Hoan Thai, successful Philadelphia real estate investor today. And the takeaways are what I really want you guys to focus on. And it's going to be interesting, speaking to Hoan before the interview, is where he thinks the best Philadelphia neighborhoods to invest are in today and why, how Hoan scaled his rental portfolio, how he successfully uses social media, and advice that he has for newer and seasoned investors to get started today. So if you're looking to invest in or around Philly or in general around the country, this is the video for you. Welcome to the show, Hoan.
All right. What's up, David? Thanks for having me.
Yeah, absolutely. If you don't mind just giving us a little bit of Hoan Thai background. How did you get started in real estate, buddy?
Yeah, like everybody else, I'm sure they read Rich Dad, Poor Dad, and that was it, right? They're like, okay, I'm going to buy real estate. And so I read Rich Dad, Poor Dad, but Rich Dad, Poor Dad, unfortunately, doesn't teach you how to invest in real estate. It just kind of tells you to invest in real estate. So I was kind of stuck for like 2 years until I found myself where a guy was like, hey, I have this seminar. And this is before seminars and gurus and all that were real popular. He was like, yeah, I run this little thing. And I was like, okay, I'm in. I want to learn how to invest in real estate. So I went to a seminar, and then he taught me the BRRRR strategy before the BRRRR strategy had a name. So he was doing that with commercial properties. And then I just started applying it to like multifamily properties and then single family properties. So early on, this was 14 years ago at this point. And so I bought a 6-unit apartment building as my very first deal because as a BRRRR, it worked out perfectly. I was able to buy it so cheaply and renovate it and then refinance it, and it worked out great. And what's crazy is people are like, how did you fund it? How did you buy that deal initially? And I was like, I used hard money, and the hard money cost me 6 points and 16% interest. And then I had to pay the broker 2 points. So really it was like 8 points and 16% interest. And even with all of that finance cost, the deal still worked out as a BRRRR strategy where I was able to refinance all my money out. So that's how I got started. And back then, Philly was great because properties were cheap. Property taxes were even cheaper. And so you were able to buy up whole neighborhoods like for nothing and refinance them all. And so you could own all these properties with no money out of your pocket. So if you guys are listening and you're like, whoa, how, you're able to buy properties with no money out of your pocket, the answer is yes. It's harder today than it was before. So when you first had the idea, whoever's listening years ago, you should have jumped on it then because it's harder now. And if you have the idea now, if you're like, this is a brand new idea for me, this is so cool, start now because later it's going to probably get even harder. So now is always the better time than later.
Gotcha. Do you still own that 6-unit today?
I do not. I am liquidating my Philadelphia portfolio. I am liquidating. I'm selling all kinds of stuff. Here's what's funny, actually. I sold that 6-unit back in 2018 because everybody was screaming their heads off that the market was going to crash, right? Because the market had crashed in 2008. And everybody was saying that, oh, market cycles are every 8 years, every 10 years. And they just kept repeating that over and over and over and over and over. So 2016 came around and I was just like, oh man, this is the 8-year mark. Let me consider selling this, right? And
Yeah.
then there was no crash yet. And then 2017 came around and then still no crash. And then I was like, okay, I got lucky. Let me sell, right? And so I sold it in 2018, still no crash. 2019, still no crash. 2020, not really a crash in real estate and actually a boom in 2020 because of COVID. And then
Yep.
2021, 2020, and here we are. Interest rates are as high as ever, still no crash. Where is this crash that everybody predicted?
And
So,
that property is probably worth a lot more today than it was when you sold it in 2018, I would assume. And rents probably have almost doubled from like
yeah.
10 years ago, which is kind of
y-
crazy.
Yep. So, you know, people can't predict the future. They suck at
Yeah.
it. They're
No,
terrible at it. And
I I actually remember hearing read it was such a big thing, the 8-year cycle a while ago, and now we don't
yeah,
read anything about the 8-year cycle, but it was
no,
big because I remember reading a bunch about it. The 8-year cycle, it's gonna happen in every 8 years, there's a
yeah,
downturn in real estate. So why
yep.
did and walk me back, why did you initially start investing in Philadelphia? Like,
Because I
what was
lived in
the initial
Philadelphia.
thesis?
I lived here. That
Okay,
was it. No thesis. Just I live here. Here's a property. Buy it. No
gotcha.
thesis. Yeah,
And
yeah,
and
no.
the numbers worked. What
Yeah, the numbers work. So
yeah,
that's the thing, right? In order for me to have overcome my fear in real estate investing, I needed to run the numbers over and over and over. People are like, "Oh my God, that's risky," and most people, that's where they stop. Oh, it's risky. I can't do it. Stop. Period. And then if you go deeper, it's like, why do you say it's risky? And then they go, hmm, well, because you can lose money. And then I go, okay, how could you lose money? And they go, huh, I never thought about it. Well, what if the building catches on fire? Okay, you bought insurance, right? Well, yeah, okay, so that's covered. What if you go over budget in rehab? Okay, what if you bake in a contingency, right, to cover overages? Okay, what if you don't get enough in rent? Okay, so if you drop the rent a little bit, could you get the property rented from your thesis, right? Could you still make it work? Maybe. Okay. How much do you need to drop it? At some point, it'll run out, right? If you drop it enough. Yes. Then ask yourself, does the deal still work at that lower number? Okay. So only do that, only do the deal if it works at the lower number. Right. And so what you're trying to do is shed light on the boogeyman, meaning if you can uncover what you're afraid of and then figure out all of the risk mitigation steps in order to make that risk go away, then you have nothing to fear. And if you're still scared after you run all of the numbers, after you like looked at every this, that, the other, and you're still scared, then you're just a little punk. That's all. That's what it is. You're just a punk and you don't deserve to be in the business. But the few who can overcome that deserve all of the wealth in the world because they're taking action despite being scared. And that is called courage, right? And luck favors the bold, or life favors the bold. And those who take action, they get the results.
yeah, agreed. I also think that even if you've purchased like tons of properties, there always is going to be some amount of nerves involved in buying real estate because it's an unknown asset. I mean, as you get experience, you get excitement. I think there's a lot more excitement than there is nerves or paralysis, which I think that a lot of investors get into. So they get into paralysis and they say, "I'm not sure if that's going to work," because they've never done it before, and they channel that as risk instead of just saying like, "Hey, I've just never done it before, so it feels risky." But it
Have you
isn't.
ever watched the show Billions? Have you ever
I
watched the
have
show
not.
Billions?
No.
Okay. There's a scene. So he's like a investor or whatever, right? Stock market kind of investor. He goes, "Hey, do you know what really good investors feel after they like did an amazing trade and brought in millions of dollars or whatever?" He goes, "They're super excited. They're ecstatic, right? Do you know what really great investors feel after they close an amazing trade? You know what the really great investors feel? Nothing." So eventually you get to the point where it's not exciting. It's not anything. It's just what you do. Like you don't get excited for like tying your shoes or whatever. It's just like, yeah, you don't get excited for brushing your teeth, right? Like little kids get excited for brushing their teeth because it's new. They got a toothbrush. They're like, oh look, I'm being a big boy. I'm the big girl, right? They're excited. Do you still feel that feeling when you brush your teeth? I'm gonna say no. I'm probably gonna guess no. that really great investors, they feel nothing because it's just like, whatever. Real estate's not that exciting to me anyway. It's just like, okay, went to the store, bought carrots, picked up laundry detergent, bought a house, like whatever. It's just, I don't know, it just becomes nothing after a while.
Yeah, I mean, I guess it's like conquering Mount Everest if you've done it once. You get to, I mean, you're shooting for a goal, right? You're shooting for a goal. Once you get that, hit that goal that you want, it's a little less exciting. I still think there's a deal junkie. A lot of real estate investors get into this deal junkie phase. I know I myself semi feel that way. If I get like a really good deal, it's exciting. I'm like, wow, this cash flows are crazy. Like, can't believe nobody else picked this up. Like, what's going on?
I think I'm a little different than most investors that maybe attend your show, and I say that because like I hate real estate. I do real estate because it serves a purpose. It's a tool to fund my lifestyle, and it's a tool to fund my family's existence. It's a tool to allow me to do the things that I care to do. It's a tool that gives me my freedom. It's a tool that it's just a tool. But the tool, the real estate itself, I don't care for. The fact that I do real estate is because the model works so well. Like, where else can you go and get like 100% financing, 120% financing for your deals, right? And that provide you tax benefits from depreciation and such, where you can raise money from other people, where you can create passive income, where appreciation occurs because everybody can, wants to buy real estate. And so there's appreciation each year. Also because of the, because inflation happens and your asset, this property is a huge asset and it grows by a lot, right? And then when you're leveraged, so you have a mortgage every single month, you got principal pay down. So your equity gets higher and higher each month as well, right? It's just a model that works so well. I hate real estate because it doesn't do anything. It's not exciting. It's a box, but it's a model that works really well. And all I do it for is because it provides money. So that's why it's like, I'm not excited by it, but I do it and I'm really good at it.
It's not,
So
I
there's
mean,
a
what you're
big
saying is
difference.
real estate isn't your passion. It isn't your end game. It's a means to an end. I also love the mindset that a lot of people don't think about is they think that they have to love real estate to do it. And your mindset that you're sharing, like, hey, I hate real estate. I do it because there's a better, I want this end game over here. And that's why I do it. And just sharing that you actually don't have to love real estate to make it work for you, your lifestyle, your family.
I
And
don't know if
building
you
wealth.
saw this post that I did recently, and it said, what's your dream job? And then I wrote, like, in my dreams, I don't work. So, like, what do you mean what my dream job is, right? And so it's like, oh my gosh, are you passionate about real estate? Do you dream about doing real estate? It's like, no, who does that? Right? It's like, again, we were all put on this earth to like pursue the things that we like and to grow a family and to like just make sure things are cool at home. The fact that we do real estate for money is just like whatever, that's what we do, you know?
Yeah. Well,
Yeah.
talk to me how you do real estate. Do you have
Okay.
rentals? How do you make
Yeah.
money in real estate? Talk to me
Oh,
that.
400 different ways, right? Okay. So, let's talk about rentals. So obviously you can buy a property and then rent it out and you collect rent. You can also buy a property and then fix it up and then flip it. Cool. You make money that way. I can also get a property under contract and then sell the contract in a wholesale and make a fee. I can also find a property and then have somebody participate in the deal, and then we do the deal together. And so it's like a joint venture. I can also find the deal and then wholesale it to somebody and then provide the lending to that person and then make money on the interest from lending the money on the project. Or somebody else can find the project and then I can just lend on it and make interest on that way. So I'm not making that wholesale fee, but I made interest. I can also invest in people's projects and be an equity partner, whether through a syndication or through a genuine like partnership. And I can create both cash flow as well as an equity position. So when we sell it later, I get capital gains that way. What else can I do? And then when you go into each one of those models, you can go deeper and deeper and deeper because I can buy a rental and then I can then do a lease option to somebody and then sell it to them later. Or I can buy a rental and instead of renting the house out to one person, I can rent out the bedrooms. They're calling it co-living these days, but it used to be like a rooming house, right? So you can do that. And then you can also start investing in other asset classes and you don't have to be the operator. You just have to be one of the three things. You can provide the deal, provide the operations, or provide the money, right? So those are the three things. DOC, deals operation capital, right? DOC, like the doctors are in, right? DOC, deals operation capital. Provide one of those things, and then you can make money. So sometimes I provide the capital for a person who's doing the operation, and the person who's doing the operation, maybe they found the deal, or maybe somebody else found the deal. But I make money in those different things. And the operator, the deal that they're operating, might be a self-storage facility, might be a warehouse, might be a hotel, might be a huge multi-hundred unit apartment complex. Why I specifically chose all those asset classes? Because I am invested in all of those asset classes. So I am diversified that way. You can provide hard money and collect the interest, like I mentioned earlier, or you can broker hard money. So maybe, David, you have money, and then I know somebody who needs to borrow money, and I say, hey, you two should meet, and then I make a broker fee. So I can make fees off of that. So how do I make money in real estate? You name it. I probably am making money that way.
I think the audience, think what would be valuable to the audience is what are like the top two of those strategies. You named a ton of strategies. There's a ton of ways to skin the cat. What are like the top two strategies that you're using most today?
Lending and partnerships. So the lending where somebody has a deal and then I just provide the money. So that's probably one of the.
You're talking about hard money loans.
Yeah. So doing hard money loans. And then the other would probably be investing in other people's deals, like in syndications. So both are requiring to work with other people. And I think this is like the evolution of my investing journey, is that it used to be just me. I find the property, I find the money, and then I run the operations, right? And it's all me, and I own everything and whatever. Now it's like I'm working with different operators as they do what they do, right? Which allows me to do way less work, which is pretty cool. It is super cool, actually. So I'm doing way less work because all I'm doing is, here you go. I provide the money one time, I get paid back all of the time until the deal's over. And that was it. I just did that one little piece of work that one time. Ta-da.
Yeah. No, I love that. It kind of shows the progression of different seasons of an investor's life. Often as people getting into real estate, their mindset is, hey, I'm going to build this big rental portfolio. Sometimes they just keep that rental portfolio forever. It's sounding like that you decided, hey, I don't feel like this is a lifestyle choice for me. I feel like I'm doing a ton of work. And so there's other investments in real estate that require a little bit less work. It's a little bit more lifestyle design. And so you can still make relatively passive, if not more passive income from those investments or from hard money than being the operator. Did I shed that in the right light?
Yes and no. Okay. Yes, in theory, like it's pretty cool that I do less work and all of that. And it allows me like a better lifestyle, if you will, right? But the way that was framed kind of sounds like I don't want to do that work anymore. I'm shying away from owning rentals and all of that. And that's not necessarily the truth. I'm shying away from rentals in Philadelphia, and I'm shying away from the rentals in Philadelphia because the administration, the people who run housing, the people who are creating the laws around rental real estate, they're just so ridiculous. And I think they're catering to the voters that are typically tenants. And by seeming more tenant friendly, they get the votes, and then city of Philadelphia suffers. They're saying like, we're going to make it so that your housing is better and the affordability is better and all of that kind of stuff. When in fact, the things that they're implementing, though on the surface sound great, actually hurt the end renter, because the end renter is going to ultimately pay more. Because if you think about it, right, if you're going to demand of me to follow this regulation, and every step of the way cost me more money, in order for me to even do real estate, I have to pass on those savings to you, right? So all of those extra costs go to the tenants. So in this like theory of like, we're going to create more affordable housing, we're going to create better housing, you're creating much worse housing, because now us landlords have less money to reinvest in our own business, to do the proper renovations, to buy more expensive materials in the properties, because we have to now fund all of these regulations and laws and everything that, I don't know, the people it was designed to protect, it actually ended up hurting. That's what's happening. So it's not that I'm shying away from operations of businesses, or the rentals. It's just that I'm just not buying more in Philly because the legislation is just looking worse and worse and worse for landlords.
You're not liking the landscape in Philly. And how about the cash flow numbers in Philly?
Also getting worse.
Also
getting worse. Right.
So it's harder to find deals, and the landscape, as in political landscape, maybe harder to do evictions, maybe harder to do.
Yep. Harder to do evictions, harder. It takes longer to do evictions. Property costs are higher. Interest rates are higher. Rents haven't really grown that much. And then property taxes have gone through the roof. So Philadelphia has made it terrible all the way around for us to be able to be landlords and profitable landlords. So if it doesn't work, then we're not going to do it. Right. And it's just
so
that.
are you not looking at any properties in Philly anymore? Or do you still look at
I keep
properties
going
in
back
purchase?
to, I keep going back to not doing rentals in Philly. You can still flip. You can still do wholesales. You can still do other things in Philly. I'm just not doing rentals. So not rentals in Philly.
Well, let's talk about the strategies that you're doing and that where you're looking for those strategies. So if you're looking for flips and you're looking for wholesales, what areas are the best areas in Philly for those?
So that's the thing, right? I also run my business a little different than most people, like where most people have a acquisition strategy in terms of like, okay, we're going to send out blanket marketing to this neighborhood, or we're going to do cold calling to this neighborhood, or text blast, whatever, right? That's not how I ever ran my business. What I would do is I would just create social media content. People would then have a real estate property that they'd want to send me, and then they send it to me, and wherever it's located, that's the luck of the draw. Maybe it's in the Northeast, maybe it's in South Philly, maybe it's West Philly, maybe it's this, that, the other. It's wherever, but I don't discriminate. I just take a look at the property and I figure out what I need to do in order to make this deal work. Whether I need to buy it cheaper, whether I need to flip it, whether I can wholesale it, whatever. And then I just make it work for me. But I'm no longer looking at it as a rental. Maybe I might wholesale it to somebody else who is interested in making it a rental, but I'm not. Or maybe I can be a lender on somebody else who buys it. Right. And so I can make the connection to somebody else who might be interested in buying it. If it makes a good rental, in my opinion, it's never going to be a good rental. But if the numbers work for them and they're okay with the legislation, then maybe I just do lending on it. So I'm not looking in any particular area to do a flip or this or that, because I don't pigeonhole myself into a certain strategy. I go, okay, here's the deal that I've been presented. What am I going to do now with this deal? What is the highest and best use? It may be a flip. It may not be.
Gotcha. So it sounds like you're agnostic and you're mainly looking at the numbers.
Yes.
Agnostic on areas as far as, hey, as long as the numbers work, you'll invest anywhere in Philly.
Agnostic on area, agnostic on
and location,
strategy, agnostic on all of that. Yes.
Gotcha. No, that's awesome. And then talk to me, what does that like? I send you a property in Philly. What does a good deal look like? What is your buy box? What are you looking for in that flip or that wholesale or the strategy that you're using? Talk to me about what like you're like, hey, this is a screaming deal. I'm going to lock this up.
Well, it's real easy. It just goes back to like, if you look at it from all of the strategies, right? You go, okay, what's the ARV? You always start with what's the ARV, and then you go, okay, if I flip it, like what's the rehab that it costs, and then you subtract all your costs, you subtract out your commissions, you subtract out your property taxes, and then make sure you put in a little contingency for like work you're going to need to do for the property, then subtract out your rehab, and then figure out whether when you finally sell it, like how much profit do you want to make, and you subtract that out, and your final number is going to be your purchase price, and see if you can get the property for that number. You're going to do the same thing for a rental, but you're going to take the ARV and then you're going to multiply it by some LTV, some loan to value. So when you refinance the property, you're going to say like, okay, I can refinance at 70% or 65% or something like that. Whatever your number is, put that in, and then you're going to have that number, your refi number, and then subtract out your renovation cost and see if you can buy it for that number. And then you got to take that one step further. Once you have that number and once you have your debt service, your loan amount, you take your potential rent, subtract all your expenses, subtract your debt service, and see if it cash flows. And then also see if it hits the debt service coverage ratio of 1.2 or 1.3 or whatever it is. So I'm looking at it from all of that. And if any of that works, great. Then I figure out what I want to do from there. If it works as a rental, but not as a flip, then I try to find somebody else who wants to buy it. But if it works as a flip, then I consider buying it, or I still try to find somebody else to buy it. And maybe I lend on it, or maybe I become a partner, or maybe I just wholesale it, whatever. So it just kind of looks, every property is different, but that's essentially the strategy that I go through each time. ARV, and then I just figure out rental, flip, and then decide, do I want to keep it or do I want to sell it?
Gotcha. And are you starting with one strategy over the other, or is that like napkin math in your head to go?
Oh no,
hey,
it takes 5 seconds, bro. It just right. It's seconds to do this math. It's seconds, and then it's easy. Yeah, gotcha. There's no like, oh, I took 2 days to figure out this and 3 days. No, dude, like it's seconds to just knock out these numbers.
Well, my question is like, are you analyzing like, hey, it's going to be rental first, then I look at flip, then or are you
No,
not
no,
that
no, you don't. No,
methodical?
no, 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 no,
It's
no,
just
no,
like
no.
everything at
I
the
mean,
same time.
none of that matters. It all happens like you're putting them side by side. You're just doing it. You want to start with rental? Great. Do it. 10 seconds later, you're done. Then do flip. 10 seconds later, you're done. Or vice versa. Do the flip. 10 seconds, you're done. Rental. 10 seconds, you're done. Now you take a look at both, right?
Yeah.
You're looking at it after you run those numbers.
Gotcha.
All right. So does that make sense? I look at both at the same time. It's not like, oh, I look at it as a rental and I analyze it. No, no, no. It's like, it's not deep. It's not that serious. I do the rental numbers, I do the flip numbers, and then I compare the two.
And see which one it can work, or if it
Yeah.
doesn't work at all. And you just
Yeah, and it might not work for either because in order for it to work, it'll always work if you can get the number low enough, right? If you can buy it cheap enough, then it might work. Now, some things that might prevent it from working is the person might have like all kinds of debt involved, and like that might not make the numbers work because you might need to buy it for $60,000, but they have a mortgage for $80,000, right? So then you might need to do a short sale or something like that, right? But again, you're still analyzing from different points of view, and then you got to do the strategy that works. And so if a person has no equity, like you can do a subject to and take on the property and pay the mortgage that way, or you run it through a short sale and try to buy it for below the mortgage number. So again, I'm agnostic only because you don't know what that property is going to be telling you. Each property has its own story. Each seller has its own story. And together, it's one convoluted story. So my offer and my strategy needs to be agnostic. It needs to just be fluid and dynamic based on the situation.
Yeah, I think you're just smarter than me, Hoan. I'm a big fan of staying in like one lane. When I try to do like too many things, i.e., manage residential and then manage commercial and do like a bunch of different strategies, I'm like, I'm struggling with all the strategies instead of just being like, hey, let's focus in one niche and let's really drill down on this niche and get like squared away, whether it's like residential, housing vouchers, whether it's like only commercial, because each one of them has like, in my experience, each one has like a slight nuance. So if you're holding and not like getting rid of it and you have to do like a management style, it makes complexities in the business. That's been my experience. But I love that you do them all. I could not do that. I would struggle.
And I would say what you're saying is correct. There are nuances to everything, and seemingly on the surface, it's complex. But what I've been able to do is make things simple. So you see, it says on my wall, simple ways to wealth, right? I make things simple. I take the complex and I just break it down to its like smallest form. And it's like, oh, that's it. Okay. And I did that because I did that for myself early on when I was trying to learn how to invest in real estate and I had no idea what I was doing. I was like, everything seemed complex and magical until I sat there with a piece of paper and pencil and I just kind of wrote it out. And I was like, oh, that's it. Oh, that's not so bad. And I just kept saying that to myself. Oh, that's not so bad. And then now I have a whole bucket full of it's not so bad. And so this like huge complexity, it's like, oh, it's very basic. And then oftentimes I say it's like third grade math. That's all it is. Third grade math all over the place.
When you were building your rental portfolio out in Philly, were you agnostic location or did you focus on certain locations that you wanted to build that portfolio out? And can you share like what your portfolio looks like today, even though you're scaling it way back and selling properties off?
Yeah. So I'm probably holding on to like 30-ish properties or something like that now after like peeling off a whole bunch. And I was agnostic to the area because again, I didn't know what was going to come my way. I never did cold calling. I never did mailers. I never did anything like that. I always just bought properties that were referrals to me, or like I would go to a real estate agent and they would send me a package, right? And I'm like, okay, I'll buy the package, right? And I don't know what's in the package. It's all over the place. I just have to be okay that it worked. And so in terms of location, it was just wherever. I just had to run the numbers for that particular property in that location. So I couldn't dictate where the property was going to be the way that I was doing real estate. And I did real estate the way I did real estate because it worked for me. Because if I asked you, what's the best marketing strategy? Is it cold calls? Is it door knocking? Is it mailers? Is it pay-per-click? Is it Facebook ads? Like which one is the best? And you can't actually answer that because there is no best. There's only what you're willing to do. And oftentimes I would hear people like, oh, Hoan, I know I should send mailers. I should do cold calls. I should do this. I should do that. And, the joke is like, oh, look, calm down. You're shooting all over yourself, right? You don't need to shoot anything. Just
Yeah.
do what you're going to do and do it well
Yeah.
and do
Be
it
consistent.
consistent.
I mean, my answer to that would be whatever you can be consistent at.
Exactly.
You can't
Yeah.
be consistent. You can't have iterations of whatever you're doing. Then you can't know, like, this isn't working. I'm not doing it well. And I also think people try to not use they try to use like a but instead of just an and. Like, why can't I just do this and that? We always like to choose like one or the other. This one's better than that, so I'm only going to do this.
Yeah.
So that's interesting.
Like a social media post I did, right? Like I would post something and then somebody would eventually, because you never know when somebody has a property to sell. You can always post out there like, hey, I'm looking to buy properties. I'm looking to buy properties. I'm looking to buy properties. But David, if you have no properties to sell me, you're not responding to my posts, but you are seeing them. And then maybe you end up inheriting a property and you're like, Hoan, I have a property to sell. I didn't know that you were going to inherit one. My job was just to put the post out there so that you would eventually see it when you did have a property. So now when you inherited that property, do I know where that property is? No, I have no idea. I have no idea if it's in Northeast, South Philly, West Philly, whatever. I have no idea. But then you go, Hoan, I have a property. I'm like, cool, I'm going to go check it out. And then I go check it out. And then let's say I buy your deal. And let's say it's such a smooth process that you then refer me to your cousin who wants to sell their property. And then so I go to the cousin's house, I meet them, and we strike up a conversation, and then I end up buying their property. And then what happens is maybe their mom wants to sell a property. So then I go and I talk to the mom, and then I buy their property. And then maybe the mom has a sister, and I strike up a conversation, and then I end up wholesaling that property. Well, guess what? That was a true story. Did I know where any of those properties were going to be? No. Did I know that was going to happen? No. Did every property have a different kind of nuance and strategy and reason they're selling and all? Yeah. And so did I need to be flexible and dynamic and take a look at it for what it was worth and everything and like handle it that way? Yeah. Because if I was just like, I only do flips and I only do flips in the Northeast, I would have missed out on all four of those.
Yeah.
See, you see why I can't do what you're saying? Like, oh, what's your buy box? It's like, bro, where's the buy box in those four properties? Well,
it's a dispose strategy or acquisition strategy seems to differ, but that's great. I mean, it opens you up to a lot more things, a lot more deals because you're so open and an agnostic strategy. And when I think of you, Hoan, I think of Hoan Zone. I think of social media. Before I hopped on this interview with you, that's what I like relate you to. I'm like, oh man, so Hoan is always out there. I don't even know how he comes up with the like daily comedy social media posts. He must be ChatGPTing in an image generation and like putting them together. But
what's
before
funny
we
is
chat,
ChatGPT is not that funny. I've tried using ChatGPT to come up with humor, and I think it is just so dry. It is so terrible. I could not use it. The stuff that I post, I have to come up with. I couldn't use ChatGPT. It was never funny.
No, I've been using it a lot more recently as for all different things, for health reasons, to like track my stuff. And it's been awesome. It's like having a special executive assistant.
Yeah.
Before we hop into social media that I feel like you are the king of, the last thing I want to just hit for your like properties, for your portfolio, are you self-managing those or do you have a property manager?
I have a property manager for most, and then I self-manage a couple.
Okay, cool. And that's how
the
it
ones
looks.
that I self-manage, I self-manage because I was self-managing all of my stuff, and then I found a property manager, and then like every time I would buy a new property, I would just give it to the property manager. And so some of the things that like I was doing myself, I would kind of like, oh, is this one easy enough to manage? Did they ever call me? No, they're not. No need to pay the property management fee. Now,
that's a great nugget. That's a great nugget. Because I do the same thing.
Here's a better nugget for you. A lot of people starting out in the business say, I want to self-manage because I need to know how things are going to go and all that kind of stuff. And, before I hire a property manager, I kind of think like hiring a property manager is a good thing for a newbie because property managers know what to expect and know what to do. How is it that a newbie is going to know what to do if they've never done it before? So hiring a property manager will make sure that you have the right paperwork in place. So like, do you have your rental license? Do you have your lead certification? Do you have your bed bug addendum? Do you have this, that, the other? All of the things that Philadelphia needs now. You know how I was talking about regulation and they're just like stacking it? It's easy to forget, or it's easy to not even know because you're a newbie. Well, guess who knows that information? The property manager. Now, here's the thing. David, can I rent a property to you if I don't have a rental license? Can I physically allow you to move in and pay me money? Can I physically allow you to move in and pay me money?
Yes, you can.
Yes, I can.
It's not right, but yes.
Correct. Not right, but I can physically allow it to happen. Okay.
It's currently happening, I'm sure, with plenty of properties.
So imagine I'm a little bit smarter and I say, oh, I know I need a rental license. So David, can I let you move in? And I have a rental license. Can I let you move in and you pay me money? The answer is, of course. Of course. But do I also need a lead certification? Yeah. Do I also need a rental suitability certificate? Yes. Do I also need the bed bug addendum? Yes. Do I also need to give you the good housing handbook or whatever it's called? Do I also need to give you that? Yes. What if I didn't do any of those things? Then I'm not actually compliant. Will you, David, as my tenant, tell me that I'm not compliant? Or will you just assume and then just move in and pay me the money? It's probably the latter. You'll just move in. You're not going to tell me that I don't have my stuff in order, but a property manager would. So now, here's a question. If you were paying your rent and you were a decent tenant and you were doing this every single month, right? No problems. Come month 12, what typically or should happen? Or come month 13 or whatever, and you want to continue to stay? The answer is I should raise your rent.
Lease renewal is what I was thinking. But
lease renewal with a rent increase. So a lot of people go, well, David's been a good tenant. Why would you raise the rent on him? Okay. So I don't raise the rents. So let's say your rent is $1,100 and I'm able to cash flow $150 after I pay my taxes, my insurance, my mortgage, my maintenance, my management, all that stuff, right? And I clear $150. And then the next year goes by. I didn't raise your rent. And then the next year go by. I didn't raise your rent. And then the city goes, hey, guess what time it is? It's time to raise your taxes. And then you hit me with taxes. And then it goes like, all right. So my taxes went up $250. So now I'm losing $100 a month. What do I do? Do I just tell David that his rent has to go up $100? Even that $100 is a lot. And even if I raise it $100, now I'm at zero. I am zero cash flow. I'm not negative, but I'm zero. That doesn't work either. So really I have to tell David that I have to raise his rent $250 this month just to be where I was in terms of cash flow. And even at $100, $150 a month cash flow, that's not a lot of money. But I'm raising David's rent $250 now. How is David going to respond? That's not a good call. Hey, David, I got to raise your rent, right? If your rent was $1,200, now I got to make it $1,450. You see, this is why you need to do incremental rental increases every single year. But what do landlords who self-manage do? They let their feelings decide. Nah, David's been a good tenant. I'm not going to raise it. David's been a good tenant. I'm not going to raise it. The city raises it on you, and now you're screwed. And now you have to make that call to David and say, hey, David, I got to raise your rent $250. And you, David, are now not happy.
And so that story was why you're recommending property managers. I will give a caveat to that not all property managers are great property managers.
Oh, so that needs to be the assumption that they're not.
Okay. Well, sometimes people don't assume that. So you do have to vet the property manager and make sure that they're telling you all the truth, make sure they're squared away, make sure they have great documentation, make sure they're using the right platforms, make sure they're making it easy for you as a landlord. And so I've had plenty of property managers that have been terrible.
Yes.
And so I do want you not just to think like, hey, a property manager is going to be your saving grace. You still have to do due diligence on the property manager. And so that caveat with all your stuff. I do want to switch over to the Hoan Zone and talk about your social media presence. That's what I think of when I think of you. I think of, hey, this is one of your like super skill sets. Can you talk to me about what you're doing for social media and how that works in your business?
I am posting every day or almost every day and doing multiple posts a day. And it's purely on Facebook. I do like a little bit on Instagram, but I've been just doing Facebook. I like
Mhm.
Facebook because it's, maybe I'm too old. Maybe I'm old and Facebook's like an old platform. And so that's why I like Facebook. But I like that you can do video and pictures and long bodies of text. And, it's just a platform for that. So I like Facebook for that reason. And so it allows me to express myself in all different ways. And I do it every single day because I look at it as a drip campaign, like you would do with email. Typically, you'd have a website with a landing page, and then you collect the person's email, and then you would send out like a weekly newsletter or something like that, and you're like dripping on them, right? Well, I was just like, a lot of people just don't open their emails. I know I don't. Like, you can drip on me all day. I'm just not opening your email, right? I might see the header or what subject line or whatever, but that's it. I'm like just scrolling past it. So I thought a better drip campaign would just become Facebook friends with people and then allow them to see my post, and I make sure that I do a significant amount of them to be funny so that people want to continue to interact with me, at least to see it or whatever, right? And by creating these funny ones, I then have like the eyeballs so that when I want to every once in a while throw in like a serious one, if you will, then people will read that as well. So you kind of got to give them the medicine with the candy, or the candy with the medicine, right? So you give them a lot of candy and every once in a while you slip in a little medicine and they're okay with it. So social media for me has been like a major catalyst for all the different businesses that I want to grow, as well as like a way to network with other people, kind of like how you're saying, like, this is how I know you, this is how I remember you, right? I'm top of mind for a lot of people simply because they see me every day. They read my stuff every day. So it helps that my name is Hoan, because I don't know how many Hoans but I don't think you know that many, right? And so
None.
I stand out, right? Exactly, right. I stand out in that way, and so I do these funny social media posts, and it allows me to connect with people that maybe I wouldn't have connected with, and so they'll remember, like, people who I like look up to will remember like funny things that I said, and I'm like, that's pretty cool that that, right? And so,
That's
um,
yeah, I love that. And I'll share just a brief story of one post that you posted. I don't know, a long time ago, but it was you in a rental property. And I feel like you were standing on buckets and there
yeah,
was water in the basement. And maybe there was a major holiday or something. And you were like, isn't
yes,
real estate
Thanksgiving,
amazing? This is the most amazing day in real estate. I don't know when that was. It was a while ago,
Thanksgiving.
but I visually remember that because it was kind of funny. I was like, but so you to go back to like your success in your social media, you're doing Facebook as a majority platform
Yep,
and you're doing funny posts to get eyeballs, and then every now and then you'll throw a business post in there or an
yep,
ask for your
yep.
audience to be able to respond. I love all those strategies. If you are starting over at zero today as a real estate investor, so it doesn't matter the strategy, how would you do the same thing that you're doing with your social media right now, or would you cater it differently? How would you start?
Well, if this is for your audience, if this question that you're asking of me is for your audience to learn from,
Yeah.
my answer wouldn't be the same answer for those listening. So I will give your audience a strategic way of actually figuring it out. So you see the word simple, right? So that's
Mhm.
actually an acronym that I created, and the S stands for strength. So what I would want your audience members to do is figure out what their strengths are first. So when I say strengths, I want them to think about what are they like doing and what are they good at, and then find that intersection of what they like and what they're good at, right? And so I do Facebook posts and I make them funny, and I do this, and the way, however I do it. And to answer your question directly, yeah, I would probably still do the things that I'm doing the same way, right? Because it's working for me, because it's my strengths and I like doing it. I like creating these posts because they're funny. And
Yeah.
then, am I good at it? Well, you're telling me that I am. So there you go, right? That's what I like doing and what I'm good at, and that's the intersection. But for your audience, whoever's listening to this, I want them to do the same for themselves, to think about what are they like and what are they good at. maybe a person isn't really good at social media. Maybe they're not really that funny. Maybe they feel awkward doing that stuff. So maybe they're really good at operations or something like that, where maybe they're the ones who are good at like scraping a list and then creating mailers and sending the mailers out and then having people receive the calls from those mailers and putting them into like a CRM system or something and running their business like that. And so they should focus on that kind of stuff when they're trying to grow their business, and maybe not the social media stuff. Or maybe they should pay someone like me to market for them if they want to do the social media thing. So really, it's know yourself. Figure out what your strengths are. And what I define as your strength is what you like doing and what you're good at. That's your strength. Just because you're good at it, if you don't like doing it, you're not going to have the endurance to do it long. So do what you like first and layer on top of that what you're good at. And the things that you should absolutely avoid is the things that you suck at and the things that you don't like doing. Now, there is a caveat to that. What if you're brand new and you suck at everything and you're not good at anything and you don't like doing anything, right?
Yeah.
You don't like doing anything. You're not good at anything. Then what I have to say to that is sometimes you just have to grit your teeth a little bit and get the work done. Just do, and then you would develop the skill. And then when you develop the skill, you then may end up liking it. But you got to try a lot of different things before you figure out what that thing is for you. So if you're just brand new and you have no idea, then you got to try some things. But if your audience is like 30 years old, 40 years old, 50 years old, guys, you've been on this earth long enough to figure out what you're good at and what you like doing. Figure that intersection out. That's your strength. Focus on your strengths. Outsource the rest.
And so if I am going to cater that even a little bit to really make it practical and actionable, if somebody is strong at, for say, they only use Instagram and that's their like medium, that's where you'd start for them. If they're like, hey, I like this. I'm like, I post, I have a decent amount of friends. That's where I'm going to start for social media. Would there be anything in particular that you'd post about as, a real estate investor, or would it just be to continue to connect with people?
Your job is, because real estate's a funny business. It's not like let's say I was selling like soda or whatever, or like markers. I was selling markers. If I'm selling markers, I know to go to the store to buy markers, and it's the same markers every time. Where I go to the manufacturer and I buy the same markers every time. With real estate, you don't know where that lead is coming from. Coming from people own the real estate. And so your job is to figure out how to connect with those people. So if you're doing Instagram to connect to those people, you got to ask yourself, how do I actually connect to those people? Do you create an ad that says, hey, are you looking to sell your home? Well, we offer top dollar for your home, no matter what the condition is, whether you have leaks all over the place or your home is in pristine condition, give us a call and we will buy your property at top dollar. Like, you can create a commercial like that on Instagram, and maybe that connects with some people. And then other people, you need to connect with them in different ways. Like, hey, are you going through a divorce? Do you need some help? I can help you. If you have real estate involved, which is the most tricky part, let's talk. Or you create a different thing that says like, hey, are you behind on your bills and maybe you need a little assistance and your home is looking in a disrepair? Let's talk about what your options are. Right. And then you connect with different people like that. And all of that can be done on Instagram. So, and that's remember I said what you like doing and what you're good at. Well, being good and then being great and being amazing at this is doing what I'm saying. It's just like learning those little nuances or tricks or whatever, different ways to connect with people, the different ads and all of that stuff, right? You want to get really good, learn those things. And then if you want to get even better, when you put a post out there, take a look at how it performs and then iterate from there. Be like, how could I have done that better? And then your next post is even better, and so on and so on and so on. And then that's how you become great at the thing. And then what happens is you end up liking doing it more. And so that strength of yours, that like plus good at, becomes even better.
Gotcha. Makes sense. For investors that are looking to maybe find a mentor, talk to me through why you think a mentor is important, but talk me through what the Hoan Zone offers, what you offer for investors, maybe looking to invest in Philadelphia, maybe to look investing outside. Talk me through that, if you don't mind.
Yeah, I think mentors are great because they open your eyes to things that you couldn't even see, that you didn't even know existed. And also it can prevent you from dealing with a problem that you didn't know existed, right? They give you the ability to like look around corners, if you will, right? Because they've already been there, they've already done that. And so for me, When I wanted to become a real estate investor, I struggled for 2 years, just kind of twiddling my thumbs because I didn't know what I was doing. Again, I read Rich Dad Poor Dad, and I knew I wanted to be a real estate investor. I just didn't know how. And then I was like, oh, well, I'm smart. I can figure this out. Right. And so I'm like, okay, let me go to the bank, talk to the bank. The bank's like, yeah, we need 30% down and all that kind of stuff. Right. I'm like, okay. So to buy an investment property, I need to put 30% down. And if I'm trying to buy a property for $200,000, then they're going to need like $60,000 plus closing costs. So call it $70,000. And I'm like, oh, $70,000. How long is it going to take until I get my $70,000 back? And it's like, oh, 8 years. That's not going to work for me. And then I went to the seminar, and in 1 hour, he showed me how I was able to do a deal and get all my money back within a year. And I was just like, oh my gosh, would I have ever figured out the BRRRR strategy on my own? And the answer is probably no. But in 1 hour, this mentor or a coach or whoever, I paid him, he taught me that, and my life changed like that. And then on top of that, he sold me my 6-unit apartment building. So again, my life changed like that. The speed in which I was able to transform my life was incredible, like way faster than I ever could have done it on my own. And what's cool is I was in my 20s when I did this, right? I bought my first property at 28, my first investment property at 28, which is that 6-unit apartment building. I could have been 35 before I bought my first property. So I would have wasted 7 years, right? And so think about how much a year is worth. If David, if I said to you, you can get a whole year back, how much would you pay me? It's like the number's crazy. And as the older you get, the more valuable the years are worth. Imagine you were 70 years old and I was like, David, I can transform your life and I can make you 35 again, right? You're like, okay, how much do I have to pay? And then I say, I need you to pay me $1 million a year. You would figure out how to do it. You would figure out how to give me $1 million a year to go back to 35 years old. Well, what if I tell you that you can just pay a couple $100 or a couple $1,000 and you can gain years and years of your life back? So why I'm saying it this way is because I started at 28, and because of the knowledge that I got from hiring somebody to coach me to be a better real estate investor, I was able to buy real estate really quickly, and I didn't have barriers in my way like other people would. Oh, I don't have the time. I don't have the money. I don't have the knowledge. Right? No, none of that was a barrier because my coach was telling me how to get over all of those things. I was able to buy properties. And then in my 30s, I was able to escape and be free and not have a job. And so essentially, I'm kind of like quasi-retired from my 30s on. Most people retire at the age of 65. And by the time they're 65, their knees hurt, their back hurts. They don't want to go on vacation because it's just easier to stay home because they're tired and everything sucks, right? But imagine you could live your life from 30s on and have all of those years. From 35 to 65 is 30 years. How much is 30 years worth? And what I'm saying is hiring a coach allows you to buy 30 years. That's how I equate it. By hiring this coach, it allowed me to achieve these things that it gave me my freedom that most people never get to taste. It's so crazy to me how cheap coaching is, even if it costs thousands of dollars, how cheap it is relative to what you're getting. Because the alternative is not hiring the coach, doing it yourself, making mistakes, losing 50 grand, losing 100 grand, taking 10 steps back, staying at your job until you're 65 because you couldn't figure it out. Wouldn't you have rather just paid a couple bucks to learn how to do it the right way so that you can enjoy your freedom sooner? That's ultimately what you're paying for. You're not interested in being a real estate investor. You're interested in buying your freedom. And you see real estate as the vehicle to get you there. It's not the real estate, it's the freedom that you're after. And hiring a coach allows you to get your freedom sooner. And that is worth all of the money in the world.
Makes complete sense. For those investors, do you take on any investor in any state? Is there location specific? Talk to me about
So far, I've taken on
like.
So far, I've taken on all investors in all states at all levels. I have people who are brand new, and I joke like they don't even know how to spell real estate, to people who have done multiple dozens of deals or whatever, and they're all over the place. because real estate fundamentally is the same. So I can analyze their deal. I can still ask them the same questions like, hey, what's your ARV here? What's your rentals here? What's your, this, that, the other. And the numbers, the equation, it's all the same. There are nuances in their laws that might be different. So we'll take a look at that. Maybe we'll use ChatGPT and say like, hey, tell me about like the zoning laws in Wichita, Kansas, or whatever, right? Like, tell me that. But other than that, the basics, the fundamentals, it's all the same for real estate investing.
Gotcha. And your private lending, talk to me about terms, if you don't mind, for people that might be interested in reaching out to you for private lending.
It's all over the place. There's no one size fits all. Like I've done interest at 12%, interest at 14%. I've done no points. I've done 4 points. It all depends, like what lien position, what LTV are we talking, what the ARV is, what the exit strategy is, how long we're talking, all of those kind of things. And if my terms for my own personal money doesn't work for you, I can often broker it to somebody else where their terms might work for you. So it's iterative, like all of my investing. It's all kind of like case by case.
Yeah, makes sense. Where's the best place?
Some lenders won't lend on second position, right? But I recently did a second position loan. Now I charged a little bit more, but it allowed the person to do it. I had another loan where the person was borrowing it, but it was in their personal name. And so that's higher risk for me. So instead of lending to their LLC, I lent it to their personal name. And again, that requires a little premium. So every situation is a little weird.
Yeah. Well, and out of curiosity, I mean, since you went down that road, why did they need a second position loan? Was it for a rehab? Was it for the rehab? What do they need that second?
Yep. So they would like they bought the property years ago and it was a rental property, and then the tenant moved out and then they needed to renovate it so that they can sell the property.
Gotcha.
But there's already a first position mortgage on there. So now it's like, I need money to do the renovations, but it's going to be in second position. Okay. I understand. What's your ARV, what's your LTV, all that kind of stuff. And am I safe? And if so, cool. Let's go.
Awesome. And I mean, last question before you give out your contact. Last question before you give out your contact information of where people can find you. What does your future look like in real estate, Hoan? Talk to me about just your future in real estate.
I don't know. I say I don't know because there's so many different ways to invest in real estate that I'm not going to be like, oh, I'm definitely going to do this or I'm definitely going to do that. I don't even know what city or state I'm going to invest in, let alone what asset class, or if I'm going to be active as an operator doing rentals, or if I'm going to be passive doing lending, or I'm just going to like work with other people and just advise for them and be like a silent partner, if you will. Like there's so many different ways to do real estate. I just leave the door open. And the other thing that I do is I network with a lot of people. And through networking, I'm learning about different strategies and different operators. And then I just kind of like go wherever life takes me. And so I try to stay, smart and on top of everything, like be really good with my numbers and all that kind of stuff. So that when the opportunity comes, I know how to capitalize on it. So when you were saying like, oh, well, maybe it's because you're way smarter than me or something like that. Well, my suggestion would just be like, learn it all and make it simple, create mnemonic devices, make it so that you understand it conceptually or foundationally. And so that when new things come your way, you can go like, oh, this is kind of like that. And I understand that. So then I can understand this, right? It's like, hey, can you explain how rental real estate is kind of like this marker? And then like, if you can connect that, make the connection because you understand what a marker is, can you, so all you got to do is, with every asset class, it's like that. They all have their nuances, but it's not that far from the tree. It's just like, okay, the tree of real estate has all of these little branches, but they all come back to the tree. So you just, you're just learning a little bit. And so I leave it wide open for that.
Yeah, I have one more, I guess. Since you are the networking, I feel like networking is your specialty, your superpower. Well, I mean, can you give me a piece of advice on networking for the audience?
So early on, when like you're going to a new group, you want to go around, introduce yourself, but then also you just want to be curious about everybody else and learn who they are, right? Allow them to speak, allow them to just really share authentically, and then ask really good questions for them to go deeper. And like, I feel like you've done that today. like your questions and your interviewing style today, David, you're good. You allow me to speak and you don't do much interrupting. And then I feel like I can just keep on going and going and going and going. Right. And then at the end of the day, I'm like, wow, the conversation is great. And then if we did 2 stopwatches, it's like, how long did David talk and how long did Hoan talk? It's like, oh, wow, Hoan talked for 49 minutes and David talked for 11. It's like that conversation was very lopsided, but Hoan felt like it was a great conversation. Right. So you kind of want to do that in networking settings.
Yeah.
And here's the other great one. Here's the other great one that's really tough for people to do. Try to remember other people's names and then what you talked about. And so like, oh, David, good to see you again. Hey man, how's life been since that last time I saw you at the Renault winery or whatever winery that was? And it's like, like, or how's your mom dealing with like XYZ and all that kind of stuff? And it's like remembering your name and then remembering something about you. So the next time we see each other makes you feel really good, right? It's like that. So
I love that. It sounds like you're preaching the book, How to Win Friends and Influence People by Dale Carnegie, which is one of my favorites. Have you read that one?
Yeah, many years ago. Yeah.
For the audience, if you haven't read that, it's an amazing networking book. The title is Deceptive. It's just about it being a good human being, basically.
Yeah.
No, I appreciate it, Hoan. I appreciate everything you shared. Where can people connect with you on the Hoan Zone? Where's the best place to reach out?
Yeah, they can email me. So I'm creating a new company. So I'm kind of gravitating away from Hoan Zone because if you don't know Hoan, then you don't know what the Hoan Zone is. So I was just like, all right, how do I create a company, a name, of this or that is like understood without explanation, without me being there to explain it to you. So I created Simple Ways to Wealth. So this is going to be my new company, Simple Ways to Wealth. So learn at simpleways2wealth.com would be the best way to email me. And then my website is being developed as we speak. So maybe, I don't know when you're going to release this episode, but maybe by the time you watch this episode, the website will be up. I'll have different free giveaways and all that kind of stuff and content for you guys to consume. But yeah, learn at Simple Ways to Wealth is going to be simpleways2wealth.com. It's going to be the way to reach out to me.
And it also sounds like the other way to reach out to you is your favorite form of communication, the Facebook.
There you go. Absolutely. So
the Facebook, if you want lots of memes and enjoyable content running through your feed, you connect with Hoan on Facebook. I'll put your Facebook link. I'll put their website in the description.
Currently, it's Hoan Houdini Thai. Right? Hoan Houdini Thai on Facebook. And the Houdini part is all about me helping you escape your 9 to 5. So the saying was, I'm Hoan Houdini Thai helping you escape your 9 to 5.
No, I love that. I do really like the Hoan Zone name though.
Yeah.
That's okay.
I'm torn because lots of people have said that to me. They're like, oh no.
Yeah, I mean, I love the Hoan Zone name. So if you look up Hoan Zone too, you can find and connect with Hoan. Just type in Hoan Zone. You'll be able to connect them. It will still be linked. He's not getting rid of all that stuff. I'm sure it's in throughout his social media in the past. So
I came this close. I came this close to rebranding it all. And I said, no, I can't do it. I can't get rid of Hoan Zone. I'm just going to keep it. And I'm just going to build Simple Ways to Wealth in addition to Hoan Zone. So that's where we are.
Yeah, I think that's a great idea. Well, thank you so much for your time. Thanks for sharing your expertise with the audience. I appreciate it, Hoan, and I look forward to connecting with you next time when I see you.
Yeah, man. Yeah, I hope the audience didn't think I spoke too quick when I was running through all that stuff. Like for me, I know it. So sometimes when I explain, I'm just like, yeah, just follow along.
Yeah, I mean, if you guys got questions on Philadelphia and you want to beat up on Hoan for being agnostic, I mean, definitely put it in the comments and force him. Say, hey, I got a gun to your head, Hoan, and you got to give me the best zip code. I need it to invest. I don't want to invest agnostically. Put it in the comments and force him to give us
there's this
lovely, you live in Philly, man. You live in Philly. You got to give me one zip code. Give me one zip code.
There's this lovely area called Kensington that everybody needs to visit if they're not from Philadelphia. You got to go to Kensington and check out the sites. It's beautiful there. For those who don't know, Kensington is
I'm not from Philly. Is that a good place or a terrible place?
Kensington is the worst place in the world where drug use is practically allowed, right? And so you will see people who are folded in half
Yep.
like standing up, folded in half because they're high out of their minds. So we call it like stand-up yoga, where they're standing, their legs are standing, but their top half has folded over, so their head is down to their feet, and they're
Yeah.
just standing there. But here's the worst part.
It's a
It's a
sad thing.
whole block. It's a whole block. There's probably dozens, if not hundreds of people all around that look like that in this little neighborhood. And it's just known for that in Philadelphia. And it's a terrible, terrible thing what drugs can do to a person. So the joke always is go to Kensington because it's beautiful, because it is. If you've never been, if you've never seen anything like that, it's going to blow your mind. You're like, what is happening? How is this allowed? And like, what's going on? It's
Unfortunately,
just,
being a Baltimore investor, it would not phase me. It is super sad, but I am creating a short on that with you saying Kensington is the best, and I'm cutting it right there.
Kensington
I'm
is
gonna get so
beautiful.
much hate from it. People are gonna
I
be like, "These
know.
guys are idiots."
Yeah.
Uh,
Kensington is so beautiful.
no,
Yeah.
I
Yeah.
appreciate it big time.
Yeah, man.
Yeah, looking forward to connecting with you again in person. So thank you
All
again.
right. All
See
right,
ya.
guys. See ya.